Hey, good morning and welcome to the 2021 OGE Form 450 review exercise. My name is Patrick Shepard and I'm very pleased to be joined today by Cheryl Kane-Piasecki.
Hi, hope everyone is doing well and I hope you're staying safe.
So we have a lot to cover today, but what we're going to do is we're going to walk through a review of an OGE Form 450, give you some background about the purpose of reviews. Hopefully, if you had some time between yesterday and today, you've been able to take a look at the exercise and think to yourself about some of the issues you saw on the form so that we can kind of fill those in as we go through. So we know we have a lot of folks watching and we have a lot to get through, so I think we're going to flip over to the slide deck and get started. So the first question we have is, why do we do confidential financial disclosure? And the reason we do confidential financial disclosure, the only reason we do confidential financial disclosure, is to prevent conflicts of interest. And this is in contrast to the public financial disclosure system, which has a transparency element because those forms are eventually made public. We have an obligation to make sure they're complete and that they're clear and that the public can understand what's written on the form. In the case of the confidential report, this transparency element isn't present. We're only looking to protect the agency from conflicts of interest. And you can see this in other areas of the confidential financial disclosure system. For example, if you look at who determines whether someone files a confidential financial disclosure report, you'll see that the agency determines whether or not someone files based on their risk for conflicts of interest, because again, the only thing we're trying to do is prevent conflicts of interest. Likewise, we have provisions for agencies to amend the report or the instructions to better collect the information they need to prevent those conflicts of interest. So when we're talking about preventing conflicts, what is it that we mean? Well, the primary authority we're thinking about is 18 U.S.C. Section 208, which is financial conflicts of interest for employees. And the thing we're looking for is a nexus between holdings, assets, or financial arrangements and government matter or work. So what we're looking for is to see if there's any nexus between the things we see reported on the form and the duties and responsibilities of the person filing the report. So if we're looking at maybe a contract that involves a spouse's employer and the employee's working on that contract, that could be a nexus, that could be a potential conflict. That's the sort of thing we're looking for. But it's not just contracts. We also can think of things like grant making, licensings, even some rulemakings can constitute particular matters. So as we're reviewing the reports, what we're really thinking about is there any possibility for the things we're seeing on the report to be affected by the work of our agency and that employee in particular? So that's just something to keep in mind as we go through this exercise, and it's really what we're going to be focusing on today. So I think this is really important, especially for new reviewers, to look at what it is you're certifying to when you certify a confidential financial disclosure report. And what you're essentially saying is that on the basis of the information contained in the report, so what you have written down on the form, you conclude that the filer is in compliance with applicable laws and regulations. So this means that where you've identified potential ethics issues, you've taken steps to remediate that, to correct those problems before you certify. So let's talk a little bit about which laws and regulations we mean. So primarily, we want to think about all of the standards of conduct, all of the criminal conflict of interest statutes, but there are some that stand out particularly to us. And those primary authorities are first 18 U.S.C. Section 208, which we mentioned, which deals with financial conflicts. So this is when we are having a government matter that the employee is working on that has a direct and predictable effect on one of the financial interests reported on the form. So that's our primary nexus. But we're also concerned about impartiality under Subpart E of the standards. Sometimes things reported on the form don't create a financial conflict, but may create a covered relationship under Subpart E. And we have a number of classes here on the IEG, so if you're brand new to this and you don't know what a covered relationship is, and this all sounds Greek, I would encourage you to look up those courses and learn more about Subpart E. But essentially, we're talking about this, appearance concerns here. Some other things we're thinking about are misuse of position, which we find in Subpart G of the Standards of Conduct. And by misuse, we mean using public office for private gain. And really, that's the whole rule. We do provide some specific guidance about particular kinds of misuse, but we're really looking at possibilities of employees misusing their public office for private gain in any capacity. But we might see this take the form of an endorsement of a private company in an official capacity, misuse of non-public information, and sometimes we see on a 450 that there is a possibility for misuse. And finally, on part 5 of the form, we have gifts. So we want to be aware of the gifts from outside sources regulations in subpart B. And again, if you're not familiar with those, we have several classes in the Institute for Ethics and Government Library dedicated to the gifts analysis. So how do we conduct the review? What constitutes due diligence in the substance of our review? Well, I think, there are some things you want to think about. You want to see if the report makes sense. Does the form cohere as a whole, and does it seem like the person filling out the form has understood the instructions? If there are places where it seems obvious or there could be information missing, it is incumbent upon us to go back to filers to make sure they've understood the requirements and have properly disclosed the information required on the form, because without complete information we cannot conduct a thorough conflicts review, and if we cannot conduct a thorough conflicts review we can't certify the report. So there are cases when you will need to go back to a filer to get more information. Another thing you want to do is think about your documentation, right? Make it so that if someone was coming behind you to review this report, they can understand what you did and what you found. And this is important because this very well could happen. In the event that there was an actual conflict of interest, there may be an investigation and an Inspector General employee may need to review your review. Likewise, in the course of an OGE program review, it's helpful for the reviewer to be able to see your work. So we encourage you to document. And by this we mean, make good notes. When you have questions and information requests, write down when you asked the question, the information you got back. And as you make substantive determinations, when you're making determinations about how to avoid conflicts, make sure that's written down. And finally, the real sort of crux of this is the provision of advice to employees who are at risk for conflicts. So if you're going to ask them to recuse or seek advice because you found a nexus between their potential work and the things on the form, document this in some formal way. Some agencies do cautionary memos, other agencies do ethics agreements, but in any case, make sure there's a document that explains any steps that are going to be necessary for employees to avoid conflicts where you found them. And something else that I would just suggest to you is that even in cases where you conduct a review and you don't find a conflict of interest and you're able to certify the report without further input from the filer, consider letting that filer know that you've reviewed it for conflicts and you've not found a risk of conflict. I know employees don't like filling out the OG Form 450. No one likes filling out forms. But I think we do ourselves favors by ensuring that they understand that someone takes a look at this and that it has a real purpose. You're also not alone in this review process. OGE has published the OGE Form 450 Reviewer Guide, and this is really the manual. This is the shop manual for OGE Form 450 reviewers. So if you're not familiar with this document, I encourage you to become so. It has a lot of good technical information. We're not going to be able to cover all of the technical reporting requirements today. It also has information about how to review for conflicts certain kinds of assets. So this is really probably the most important tool that you have for conducting 450 reviews. And in fact, if you get nothing out of this class except you learn of the existence of this document and you begin using it in your review process, we will consider that to have been a great success. We also have a Form 450 review curriculum. Today we're doing a little refresher exercise, so this is helpful if you're a new or experienced reviewer getting back into the practice of reviewing 450s. But if you're brand new, I'd really encourage you to take a look at this curriculum because it has sort of soup to nuts all of the information you need to be an effective confidential financial disclosure reviewer, and you can work through it at your own pace. I think it's probably a good 2 or 3 weeks worth of educational material. But if you are brand new to this work and you really want to get a handle on all of the information, all the tools that are available, the curriculum is a really, really good place to start.
Okay, so Patrick, shall we jump into the exercise now, since we are in the
Yeah, I think that's enough prologue. I think we can get to the exercise.
very good. Okay, so on the course page, we encouraged you to take a stab at our practice exercise, and among other things, we gave you an agency profile. And obviously, we created a hypothetical agency and a hypothetical employee so that we all could have a common understanding of the review that we were going to be conducting. Um, in our agency profile, we indicated that the Laboratory Safety Division in the Occupational Safety Office effectively engages in rules and publishes guidance to effectuate laboratory safety standards. Included in this description were the types of safety issues that the laboratory safety standards reach to. This is obviously with a view to giving you an idea of the types of entities that could be affected by any determinations about regulatory standards with respect to laboratory safety. So hopefully you had a chance to take a look at this, because this will factor into our ability to do a conflicts analysis based on the information that we have on the form. We also gave you an employee profile that more specifically and directly talked about the duties of our employee. Um, Here we see that not only are we looking at responsibilities that reach to regulatory and policy guidance and standard setting, but it appears that our employee, as the Director of Lab Safety, also oversees enforcement types of activities, which include laboratory safety inspections. So we're dealing with another category and level of granularity of duty that's important for us to understand and have in our perspective before we actually look at the form. Um, the employee also serves on an advisory committee, and that becomes material when we think about the nature of serving on an advisory committee, particularly one that also includes non-federal entities serving on that advisory committee. These are all pieces of information that can only help to inform our identification of potential issues in, in when we're reviewing the form. Now, we know perfectly well that you may not have the luxury of having this kind of level of specificity and knowledge about your employees' duties. So we would ask you to, whenever you're, reviewing a 450, one of the first things that you do need to do is to at least contemplate what you believe the duties of the position of the person whose form you're about to review might entail. And at the very least, if you can think about what types of particular matters your employee may be engaged in, this is all with a view to helping you red flag things that you see on the form. So in our case, looking at the Director of Laboratory Safety, we know that there are inspections that the person might be involved in. So there are some specific party matters. There are some entities that could be affected through things like inspections or investigations. You also want to be thinking in terms of is it a grant making organization? Is there any possibility that we would be looking for potential grantees? Are there contracts that are associated with the duties that this employee performs? When we're dealing with scientific organizations in particular, we also want to be mindful of things like CRADAs, which are cooperative research and development agreements, which quite often are arrangements between the federal entity and universities. So those are all about having those kinds of identifying those types of general broad matters in your own mind. Similarly, matters of general applicability. We saw from our agency profile and also from our employee profile, this is a standard setting body. They engage in rulemakings and regulations and policy guidance. So we need to be thinking in a broader spectrum of the types of entities who could be affected by laboratory safety standards and regulations. So that takes us to the next thing to think about, which is once we have a sensibility about like what the duties are then we have to think about, okay, who can be affected by these duties? Who are the stakeholders? Whose oxes can be gored by these matters? In the case of our employee, we're looking at federal and research and clinical laboratories. We're looking at hospitals and universities, healthcare related companies, laboratory equipment and supply manufacturers, like who are supplying the things to laboratories that could be the subject of protocols and safety standards, lab safety education and training programs. So anyone who's offering these types of trainings for people who are engaged in lab safety, and then professional associations and societies who also may have interests in the lab safety standards. So again, it's a matter of trying to identify these things, or at least think about them a little bit in advance before you get into the form, so that it's more likely that things are going to jump out at you as you're going through the form. So let's start looking at the actual form itself. So we start always, obviously, with the cover page of the Confidential Financial Disclosure Report. Here we see Mahendra Patel is our employee, Director of Laboratory Safeties, informed us, what his position is and where he works. Of particular note is the fact that this is an annual filer. So we know it's an annual filer, so that tells us a couple of things. A, that at the very least, we should have at least one other report that this employee has filed. And so we may want to go ahead and see if we have any information about, or at least be aware that we may have information from a prior report that can help inform our review of the current report. So that's one critical piece of information about the fact that it's an annual report. If this were a new entrant report, we would want to make sure that we had an appointment date on the form, because that appointment date is the triggering date for when the form would be due, and the employee would be required to file that report within 30 days of their appointment to the position. The next critical piece is the next section, where this is where the employee is going to let you know what you should expect to see on the remainder of the report, which is to say, for each of the parts of the report, parts 1 through 5, they indicate by checking either the yes box or the no box whether or not you should see something disclosed on each of those discrete parts. So our employee has said that you should be seeing something disclosed on parts 1, part 3, part 4, and part 5. And there's nothing reported on part 2. If you looked at the report, you will see that's accurate except for part 5. And we'll talk about that once we get to part 5. But this is something that you're going to have to confirm with the employee. They said there was something to report, and there's nothing to report there. So we would have to go back on that. For part 2, very quickly, I just want to say it never hurts to confirm with an employee whether or not they meant no when they said no. But I will say, with respect to reportable liabilities, the universe of reportable liabilities is actually rather circumscribed. If you look at the instructions, I think you will see that there aren't many types of liabilities that actually are reportable. The kinds of liabilities that we typically think of like mortgages and personal loans from banks and institutions, credit cards, student loans, things you're getting from a financial institution. Those are the things we typically think of as being reportable liabilities. Well, we have excluded those largely from being reported as liabilities. Any type of a liability that's coming from a financial institution that's on terms that are generally available to the public are not going to be reportable liabilities. So again, you might want to go back and confirm with your employee that no means no, but it's quite likely that that's very accurately reported. So then finally, just as a reminder, we always want to make sure that our employee has signed and dated the form, because signing the form is their attestation that the statements that they've made on the report are true, complete, and correct to the best of their knowledge. So, excuse me. So you're going to want to make sure that your employee has signed the report. So let's move on to part 1, assets and income. Here, you're typically, what you're going to be looking for, what you're going to expect to see are outside earned income from the employee or the employee's spouse, And that's a typical problem in reporting sometimes, is that folks forget to report their spousal outside earned income and investment interests. So we're looking for sources of outside earned income. We're also looking typically for investment interests like stocks, bonds, and sector mutual funds, whether those are held outright or in a brokerage account, or if they're held through some form of retirement program, like a 401k, a 403b, or some other type of program. You don't report government-related salary and benefits, however. So you wouldn't see TSP on here, and you wouldn't want to see federal salary on here. So let's take a look at our first item on part 1 for assets and income. And we see that it is BioRaft, and it says that it's digital lab risk management. So we see that entry, and then we have to immediately start asking ourselves some questions. The first question that we have to ask is, what is this thing? What is the nature of the interest? What is BioRaft, but also what does it represent? Is this outside earned income? Is this an investment interest? Because we can't possibly do a conflict of interest or other analysis on this item until we know for certain what it is. We need to know who held it. Is it the employees or is it the spouses? And we also are going to need to confirm that it is actually no longer held. And then most importantly is we're going to want to ask ourselves and find out, is there a nexus? Is there some sort of direct relationship between this interest and the employee's duties? So we looked online. I pulled offline what I was able to find on BioRaft, and the employee's description actually is probably about as good as the description that the company actually gives you. It's a little bit of opaque, I think. It's clear that it's laboratory safety related. It appears to be a software sort of compliance management, digital management for mitigating risks and engaging in laboratory safety compliance. So that's enough for us for purposes of this exercise to know that we definitely have a relationship, or it appears to be there's some sort of relatedness between what this company does, and particularly the fact that they clearly have a business unit that does business with the government. So it's a government-facing business unit that they also have as well. So I think that gives us enough information to say, yeah, we probably need more information, and we need to look into this a little bit more closely. Now, so in order to find out more information, because we still really can't quite tell from part 1 exactly what we're looking at, we need to look at the 450 as kind of a storybook. And I know that reviewers and filers find it a little frustrating, the degree of redundancy that sometimes exists between the different parts of the form. It seems like you have to report the same information in several different ways. But this is a clear example of where part 3 information really helps to inform part 1. So when we get to part 3, we see we've got BioRaft is listed there. The employee lists that they served as a consultant for BioRaft and that the position is no longer held. So at least now we know it's an outside earned income position, and we can review it and analyze it through that lens. So understanding that it was a position that's no longer held, there's some questions that we want to ask ourselves. Was this reported on a prior report? So this is one of those key pieces where document can really help you out here. Was this already vetted? Did the employee actually seek and receive ethics guidance with respect to this position before they actually performed the consultancy? And what the considerations that should have gone into that guidance, excuse me, should have included things like, did the consulting services relate to the employee's duties? Is the organization a prohibited source or vendor? Did the consultancy involve representational services? And I want to unpack this a little bit. Did the consulting services relate to the employee's duties? Clearly, we want to be reviewing this through the lens of conflict of interest, which is to say, did the employee have any duties or responsibilities that if they had engaged in them, could have affected the financial interest of BioRaft? But I think that we have to take a sort of broader construction of relates to the employee's duties as well. And this gets into the whole notion of public office for private gain, or misuse of position generally, which is to say, given the relatedness between BioRaft and laboratory safety, how is it that this employee came by their consulting arrangement? What did a member of BioRaft serve on the advisory committee? Is BioRaft a vendor? Does the director in their laboratory functions actually use BioRaft? Are they a contractor or a vendor for the agency, or are they typically a vendor that or contractor that would be affected by protocols, lab safety protocols? I think we want to be looking at how did the consulting service come about? So did the employee in some respect maybe use their public office in order to get the consulting arrangement? And then I think we also want to think about, always I think we want to think about when we're looking at consultancy services in particular, was there any possibility that there were any representational services that were involved in the consultancy? Um, One of the considerations that we want to be mindful of is another criminal statute. It's 18 U.S.C. Section 205. And 205 prevents a federal employee from acting as an agent or otherwise representing third parties back to the United States government in connection with matters in which the U.S. is either a party or the U.S. has a direct and substantial interest. And so we would just want to confirm for ourselves that the consultancy did not involve the provision of any kind of representational services by the employee on behalf of BioRaft, and particularly ones that would have involved representations back to the US government. So that's kind of the broader context of when we're looking at misuse, when we're looking at related to duties, the sort of a broader scope of ethics authorities to be considering. But clearly, we would want to know, returning back to 18 U.S.C. Section 208 and to impartiality considerations under Subpart E of the Standards of Conduct, was the employee subject to recusals during the consulting arrangement? So while they were performing the consultancy, were they required to recuse themselves from matters? And then that's all of a look back. I mean, all of that stuff that I was talking about is really kind of a look back because we're asking those questions about a consultancy that evidently has already occurred. For purposes of the fact that we understand and if we confirm that the consultancy is no longer going on and there are no arrangements for a future consultancy, then we would have to say, okay, if we confirmed it's no longer going on, the employee had recusal obligations that they fulfilled, this was vetted, everything's cool, we would still have to, for our current review, we would still have to at least consider impartiality with respect to the fact that they had this consultancy within the last year, they have a covered relationship with this organization, notwithstanding that the consultancy is no longer in effect. So we would at the very least want to consider whether or not this employee needed to recuse themselves under the impartiality rules. And if we confirm that they may be negotiating or have an arrangement for an additional consultancy, we would not only need to see that on Part 4, but we would also need to treat that as a potential 208 conflict of interest if there was a nexus between their duties. So in looking at Part 4, we look at Part 4 and we see on Part 4, they don't have anything listed as the way of a future consulting arrangement, either with BioRaft or anyone else. But I think we would want to confirm that because that would transform what would otherwise be an impartiality recusal because of a covered relationship. That would transform that into a 208 recusal because they had an agreement or arrangement or were negotiating for a future consulting contract.
So we do have our next asset, which is the Johns Hopkins Hospital, and our filer has indicated that this is the spouse's employer. And that's really important because oftentimes we don't get that information. Sometimes we do not have the indication that the spouse's employer. So we might just have an entry here that says Johns Hopkins Hospital, and then we'd have to go back to the filer and find out if that was indeed the spouse's employer. But here we have that information, and that allows us to begin doing our conflict of interest review and to start thinking about this entry. So when we see this entry, immediately we see that, well, it's a medical employment. We don't know what the spouse does, but there's certainly a possibility of a nexus here, that the lab's work could affect the work of Johns Hopkins Hospital. They may have some contracting type relationships or consulting type arrangements with the hospital. So we're going to want to think about this. So some questions we might want to ask, especially if we're seeing this for the first time, is what is the spouse's position? What does the spouse do at the hospital? Because this helps us understand what else we expect to see. So we may see that there's a nexus between the spouse's employment and the work of the agency. So we want to find out if we've not looked at this before. Is the spouse's employer affected by the work of the agency or that the employee performs? Because if this is a pure employment relationship, our standard for 18 U.S.C. Section 208 is that our employee would not be able to work on any government matters that would have a direct and predictable effect on Hopkins, such that it would affect their ability or willingness to continue to employ or to employ at the current level his or her spouse. So in the case of the hospital, if the spouse was working on an agency grant and that grant was her only reason for working at the hospital, we could have a potential for a 208 conflict of interest. So we're going to want to think about what it is the spouse is doing at the Johns Hopkins Hospital. And I think maybe most importantly, we want to look at whether the spouse has any pension or retirement universities from the university. And I think anytime you see a spouse's employer, you want to ask this question, especially when you see it for the first time, is there any retirement? Because very often we see that filers will report spouse's employment, but then forget about the spouse's retirement. And we could have all sorts of questions within the retirement question. For example, if there is a defined contribution account like an IRA or 401k, we'd be interested in doing a conflict of interest review on each of the underlying holdings. And those may have nothing to do with Johns Hopkins University. So they could be basically any equity, and we'd need to take a look at those things. So spouse's employment, we want to think about it both as a financial interest in itself and also see if there are any follow-on interests. Also, under subpart E of the standards, if we don't have any equity and there's not a possibility of financial conflict, our employee also has a covered relationship with his spouse's employer. So even if we don't have a direct 208 concern, we may have a subpart E concern if there are particular matters involving the hospital that our filer may work on. So this doesn't look like an emergency, but I think this is definitely something we're going to want to give due consideration and work through whether there is a possibility for conflict with the hospital. And I think also, we take a very careful look at these things the first time we see them on the form, particularly like on a new entrant report. But it is important to keep in mind that our work changes from year to year in the agency. So if we saw this last year and we did the analysis and found there were no problems, we may want to ask the program office to find out if we're anticipating any work with the Johns Hopkins University Hospital. So that brings us to our third entry, which is an IRA. And the IRA is a defined contribution plan. And these we see very frequently underreported. So if you see on a report just Vanguard IRA, you're almost always going to have to go back to the employee and find out what, if any, reportable assets are held within that IRA. And when we're talking about reportable assets, typically we're talking about sector mutual funds and individual stocks and bonds. So if you see IRA, or if you just see 401k and there's no indication that there are things within it, at least the very first time you see that, you're going to need to go back to the filer to confirm that there are no underlying holdings. because indeed the underlying holdings are what we are most interested in. We are most interested in finding out what exactly is held within the IRA, and here we have an indication. And what we see reported here is the Vanguard Healthcare ETF. And if you're new to this work, ETF means Exchange Traded Fund. An exchange traded fund is basically just like a mutual fund that trades like a stock. So all of our rules and exceptions that apply to mutual funds apply to almost all exchange traded funds. And here it looks like this may be a sector ETF, and indeed that sector is healthcare, which poses a potential nexus with our filer's duties. So we have some questions we're going to want to ask. First, is this a mutual fund? And to answer this question, we need to look at the definition in 5 CFR 2640, and we will find out that this is indeed a mutual fund. The next question is it diversified or a sector fund? Diversified funds, which cover sort of an entire index, for example, an S&P 500 index fund, are diversified and they're not reportable. And not only are they not reportable, they are exempt from coverage under 18 U.S.C. Section 208. So we didn't just decide not to have people report them because we don't care. It's because literally they're exempt under the law. So the next question is, if it's a sector fund, does it pose a conflict? And so when we're trying to determine if something is a sector fund, we're looking at the stated investment policy of the fund. So we're going to have to find that information and find out if it looks like a sector fund. And if we find it is a sector fund, we have to find out if it poses a potential conflict. And then we're going to, if we do find out that there's a potential for conflict, or we're at least worried enough that there's a possibility there, we really want to find out the value of the fund. And the reason we want to find out the value of the fund is because we have an exemption at 5 CFR 2640. So if this is a relatively small holding, it may qualify for the exemption at 2640, which makes our lives easier because we don't have to implement any recusals and we don't have to ask the employee to divest. So that's kind of our process for looking at sector funds. First, is it a fund? Is it diversified or sector? If it's a sector, is there a potential for conflict? And what is the value in that case? So here it looks like there's at least a possibility for a conflict. So let's take a look at our analysis. So here we have the healthcare ETF's perspective. We're looking at the investment strategy, and it provides us some really good information. It says it includes healthcare provider and service companies, companies that manufacture and distribute healthcare equipment and supplies, and healthcare technology companies. Also research, development, production, and marketing of pharmaceutical and biotech. So we can see that there's at least a statement in this investment strategy that suggests they are focusing on particular kinds of companies. In a diversified funds investment strategy, you tend to see words like, we focus on companies that have a great potential for growth, or we focus on income-producing companies. And where those are not talking about an individual sector in the economy, they're sort of talking about the nature of the stocks, right? Sort of their general performance. But here we see something that looks to be like a focus, an area of focus where this fund is concerned. So OG has some guidance, and if you're not familiar with this advisory, I would encourage you to become so. It's diagram 00030, which has our best descriptions and guidance for distinguishing between diversified and sector mutual funds. And we have some critical language here, some key language. So basically, we approach this question by examining the degree of relatedness and overlapping interests and operations among the types of companies in which a given mutual fund specializes. So we're looking at, do these sort of share an environment? And we go on to sort of suggest what that means. Do these companies form a distinct industry or business sector? And they might if they share a common regulatory environment, or if government decisions affecting one type of company would be expected to affect the others. So is there interdependence and competition among and between them? So I'd encourage you to think about this test and review this form anytime you find a sector fund or a fund that you're sort of not sure whether or not it's a sector fund. And in our case, it seems that that's probable, so we're going to want to go to that next step, which is to find out the value of the fund. And when we're talking about the sector fund, we have some additional information. We see that in section 2640-202B, OG indicates that a particular fund is not diversified because it is invested in health-related companies such as pharmaceuticals, developers, medical instruments, etc. So we do get sort of a focus here in this last section. So we see the common denominator of health to describe the relevant sector. Despite some differences, they are significantly interdependent. So this is really, part of your analysis that you want to do is to review this advisory and make a determination. And here it looks like we're kind of close, and we want to continue our analysis because there seems to be a nexus between the lab and the fund. I think Cheryl's going to take us through the American Chemical Society.
Okay. Yes, absolutely. Okay, so the last item listed on part 1 is the American Chemical Society. So similar to what we did with our prior BioRaft, we're going to want to ask some very similar questions, which is, what is the nature of this interest? Who holds it, and is there a nexus at all with the employee's duties? And if you go online, I went online, and I'm sure many of you are aware that the American Chemical Society is a professional society, it's a professional association. But what I was able to find on their site is that in addition to them being broad spectrum, dealing with chemists and chemistry as a profession, they have a unit that focuses specifically on chemical and laboratory safety. So we know that the American Chemical Society is evidently quite dedicated to chemical and laboratory safety, and it indicates that they engage with like-minded professionals and entities to provide tools to foster a culture of safety in your classroom, campus, or lab. So I think that it looks here is that there is some direct relevance to lab safety, in addition to it just generally being a professional society that our employee may very well just be a member of. So to get a little bit more information, again, to better ascertain what it is that this part 1 asset represents, if we look to part 3 again provides us with additional information so that we can better comprehend what we're looking at on part 1. So we see here that our employee says that the American Chemical Society, they're serving as an instructor for the American Chemical Society. And in addition, if we look on to part 4, agreements and arrangements, it appears that they're indicating they have an agreement to teach a laboratory safety course in April of this year, and that they entered into the agreement in October of 2020. So we have 3 separate pieces of information that still we still need to kind of suss through what this actually represents for purposes of our analysis. One of the first questions is the employee currently employed by the American Chemical Society? It would appear that they are, because they indicate that they evidently received some outside earned income. That's why it would be on part 1. That would be an indication of outside earned income received. And then they indicated on part 3 as an actual outside position. But they seem to indicate that they have an arrangement to teach a class in the future that was arrived at in October of 2020. So I think first thing we want to confirm is, let's get this thing straightened out. Do you currently did you provide services to ACS in the past such that you have received compensation? What is the nature of your relationship with the American Chemical Society? Is it you provide a course one time a year? Is it that you are an actual employee of a part-time employee, but you have an actual employer-employee relationship with the American Chemical Society? Or is this one of those things where the employee has actually kind of over-reported on part 1 and part 3, a position that they actually haven't even started to encumber. So these would be all things that you want to sort of suss out to determine exactly what the employee's status is and what it was vis-a-vis the American Chemical Society um, uh, over the last year. And we know currently they at least have an arrangement. So they have an arrangement. So we know that at the very least, they're going to have some conflict of interest issues with American Chemical Society by virtue of that arrangement. And obviously, we do want to know whether or not if the employee had previously held this position or continues to hold like a part-time employee position, whether or not that uh, was subject to any sort of review, and whether or not the employee sought or received any ethics guidance. So what do we want to know about this position? We need to know what services the employee is providing as an instructor and to whom they're providing those services. Presumptively, if they're acting as an instructor, then we would assume it's just a standard teaching position, that they're providing sort of teaching or training, or at the very least some sort of training. But to whom? Is this in a university setting? Is this in the context of the professional association itself? Who are the audiences for this instruction? Are some of them federal labs? So I think we have to find out more about, the nature of the instruction and to whom the employee is providing these instructor services. Does the instruction relate to the employee's duties for purposes of 2635.807? And the outside activities provisions of subpart H of the Standards of Conduct, 2635.807, addresses compensation for teaching, speaking, and writing that relates to the employee's official duties. So presumably this qualifies as teaching. So we would want to take a look under 2635.807 to see if the teaching in any way relates to the employee's official duties as that is defined in 807. So it might relate to the employee's official duties depending on the content. Seems very likely if you're doing lab safety instruction and you're the director of lab safety, that there's probably some sort of overlap between the subject matter. There's also another relatedness test that reaches to whether or not the American Chemical Society is an entity that could be substantially affected by the performance or non-performance of the employee's duties. So if our director has duties that could affect the American Chemical Society, then that might make this arrangement related to official duties for purposes of the restrictions of 807. Now, if you are at all familiar with 807, you will realize that there is a teaching exception. There is a carve out for certain kinds of teaching that allows people to receive compensation, notwithstanding that the teaching might relate to their official duties for certain purposes. The difficulty here is going to be the nature of the American Chemical Society. Because when you look at the teaching and speaking writing exception in 807, it reaches only to courses that are part of the regularly established curriculum of an institution of higher education, of an elementary school or a secondary school, or a program of education or training that's sponsored and funded by the federal government or by a state or local government. So it doesn't seem as though if the instruction is being done for the American Chemical Society, that's going to meet that teaching exception. So we'd want to take a real close look at this under 807. Again, we'd want to look at things like, is this organization a prohibited source? Which is to say that, do they come before his lab? Are they affected by the work of the lab? But more importantly, I think from the standpoint of if the organization could have any financial interests that the employees' duties could affect. I know a lot of times many scientists are involved in professional association activities. And one of the ways that you can have a conflict of interest with that, if you hold a position that gives you a 208 relationship with that organization, is if you have the ability to approve of employees' attendance at or participation in those professional associations activities like conferences and symposia and things like that. So even if there's no other nexus between the American Chemical Society and the laboratory duties of our director, the very fact that the American Chemical Society sponsors training courses, sponsors things that our employee might have the ability to approve or disapprove of for his employees is something that we need to at least advise the employee about and make sure that they're not directing um, employees to attend or participate in events that where clearly the American Chemical Society would have a financial interest. And now, Patrick, if you want to take over for part 5, gifts and reimbursements.
Absolutely. So our final section here, we're looking at part 5 of the form. And if you recall from the cover page, our filer indicated that they did have gifts to report. But now when we arrive at part 5, we realize that there is nothing reported. So this is going to require us to go back to the employee to find out, indeed, if there are reportable gifts. And I would structure my questions particularly around the 2 outside activity type situations reported on the form. And the reason for this is we very often see gifts, especially of travel and similar things, associated with outside positions. So you might ask about the American Chemical Society or BioRaft in particular. This is also a good place where if you have good ethics records in your program, they can be beneficial to you. So for example, you could look in the advice logs and see if you'd advise the employee about the receipt of any gifts during the year to help you find out what, if any, gifts should be reported on part 5. So in any case, we're going to have to resolve the conflict between the first page where they indicate they have gifts and find out where the error is, and we might be able to jog their memory by reviewing advice logs or particularly phrasing our questions around those outside activities, because that's likely to be the source. Not the only source that's possible, but certainly one that might jog their memories. So I think Cheryl is going to sort of wrap up for us. We're getting towards the end of the time.
Okay, yeah. So our emphasis in today's program has really been on the substantive review. Now, we certainly didn't have enough information to be able to make the firm determinations about the actual application of 208 or 502 or the standards of conduct. What we mostly wanted to assist you in doing is identifying what the substantive issues might be and encouraging you to be thinking expansively about the kind of information you will need in order to be able to make those determinations. So coming up with good questions and knowing good questions to ask, being able to identify the kind of information that is missing from the form and that frankly, more often than not, isn't even required to be disclosed. On the confidential financial disclosure report, we have some fairly bare bones information that we ask from the employee. So it's really incumbent upon us to be sufficiently aware of the requirements of the various laws and regulations so that we know what kind of additional information we need to get from our employees. So again, it's a matter of building awareness and getting additional training if you need it in order to be able to do due diligence in your substantive review. And as we noted it for at least a couple of our entries today, having really good reviewers' notes, really having a good document trail for anyone who is going to subsequently have to look at a report that you have reviewed, for you to use in your current review is really paramount. And it's mostly for purposes of making sure you can do a good review, but it's also, as Patrick noted earlier, for purposes of oversight. Our program review division is certainly going to come in and ask to see the types of documents that you're retaining, and also for any other sort of enforcement mechanism that might be required in the event that there is a likelihood that someone may have violated a law or the standards of conduct. So again, we just encourage you to document as much as you possibly can. In addition, we just want to remind you that, again, we did not really get into a lot of the technical requirements of the filing requirements on the 450, but that is why we have the Confidential Financial Disclosure Reviewer's Guide. That should be a hot link in the slide. So if you're having trouble finding it on our website, it is available on our website under financial disclosure. We actively encourage you to use this and have this be your primary source of guidance with respect to helping you anticipate things you might see on the form, helping you understand what it is you're seeing on the form, and certainly with helping your filers know what they're required to disclose and how they're required to disclose it. And with that, we'd just like to let you know that if you have any questions about any aspect of 450 filing or review, you should contact your OGE desk officer, and they will be more than happy to assist you with any issues that you may have.
Excellent. Well, thank you very much, Cheryl, for joining us, and thanks to all of you for tuning in. We hope you found this to be a helpful presentation, and we wish you a successful and safe and healthy confidential financial disclosure review season. So we look forward to seeing you again next time.
Absolutely.